Good morning, everybody, and this is your S&P 500 day trade setups for today. So we have broken through this consolidation phase that we've had for the last 3 weeks, and it's been a pretty solid break. We had a little bit of a sort of, let's just call it consolidation down here. We'll get to that now, and we had a decent break to the upside, and that has been a really decent trade. Now, at the moment, what we're looking for is we're looking for a pullback onto structure. So there's a couple of things on the 8 hour. Firstly, we have broken through the 155 EMA. We're getting a crossover of our faster moving averages here, which is brewing, but we are getting a grouping of our oscillators right now, and that is just indicating signs of exhaustion. So you need to start looking, wrong one, you need to start looking for areas of potential rejection. So look to the left here, you can see this area here. There's a swing high which has not been tested, so we sort of tried to reject it here, but then broke through, came back down, haven't quite tested that area. Look to the left, there's a lot of interaction with that, and if I go back even further to the left, you'll see there's even more interaction with that level. So this 39.85 area is pretty important and something we need to pay attention to for today. The next thing that I do want to do is just put that swing high that we've just got through this morning, and let's start looking at that at the lower time frames. So that was the previous structure, was the target that we were actually looking at for this move to the upside. It has started rejecting it, and then this morning it's basically broken to the upside. I'd be looking to see what happens on pullbacks. So if you can get a pullback onto structure, good opportunity to buy back into it. Not necessarily wanting to buy when my oscillator is a group like this and I am at a level. That's the recipe for pain. So looking for some kind of a pullback onto structure, and that should help us make a decision. Right, so let's just get down to the hour. That's what we want to be paying attention to today. So first things first, yesterday's video, we looked at that as our range. We had a nice grouping of the oscillators to the downside. We're looking for a break of that range. It came quite late in the session, so the European session was pretty much all over the place, and then we got a break here. We'll look at that on the 15-minute now, but we need to add one more level here, and that is this previous high over here. So what we're looking for is pullback onto some form of structure for an opportunity to continue this uptrend, and that starts at the bottom here at 38.97. I would say 3900 would be the round number. 3907, 3900, that would be first price. Secondly, you're looking at 39.25, and then also 39.49 or 39.50. So remember yesterday we said 39.50 was a half decent target, and that has been tagged. But if we get down to 15 minutes, let's just look at yesterday quickly. So during the video, that was what was going on. We were looking for some kind of a break and retest. The break and retest was really messy. So if I use that as my swing high, and you can see it ties up to the left, we didn't quite get there, but did break the 155, came back, formed a flag, and you can see inside bar, confirmation bar. Well worth the opportunity jumping in here with the stop below the structure. Look at the oscillators, they've separated and crossed over far apart, and whenever that happens, we have an explosive move, and that's exactly what happened. First target was pretty much, we consolidated for a bit, and this is often where you just move your stop up. You just keep picking a low of the bar and just keep the stop here. If it does break, it breaks, continues up. If it starts turning, then at least you've locked in profits, and pretty much a half decent trading day yesterday. Today we are looking a little bit exhausted with a bit of diversion, so I would expect some kind of a pullback, and these are the levels we're looking for. So 3900 would be the first one, 3925 would be the second one, and then 3950 would be something to pay attention to as well. So we could just form a range here. Then what you're looking for, the oscillators to ease off, and either a break of the range, or you're looking to buy off the bottom of the range it forms for an anticipated break up to the upside, looking for 39.85. Lastly, what you do, let's just get to a 3 hour here. Lastly, what we do want to pay attention to is this 4,000 area, and I'm going to give it to you exactly what it's going to be. It is 4,009. So that would be a stretch target there. Start getting above 4,000, we have a fairly decent setup brewing. And then lastly, and this is complete off chance this, but it is the textbook structure. So big move up, consolidation flag. We've broken the flag to the upside, so we should have a measured move a little bit higher around the 4,032 area. So I would just say 4,000 is the area that you need to pay attention to. So 15-minute chart's what you're looking for. You're looking to go with the trend. The trend is up at the moment, but you need to keep your stops as tight as possible because we are looking a little bit exhausted on some of the higher time frames. So you're looking to find support somewhere. When you find support, start bouncing off that. Then you're looking to get in, tight stop below the structure that's formed, and then you're looking at 39.85, and then you're looking at 4,000 as your ultimate target. Would be out of the market at 4,000 if we do get there. Any deeper pullback and we start forming some decent price action, that's the next opportunity. And then you're first looking for the previous high, which will be in this area at 39.50, 39.60. Get through that, then the same rules apply. 39.85 and 4,000 would be your targets to the upside. Anyway, that's my view today on the S&P. I think we should be looking for a continuation to the upside, but we want to be buying off a pullback, buy off structure. Don't want to jump in unnecessarily here. That's just a recipe for disaster. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.